I beg to move that this bill be now read a second time. My Lords, may I, at the outset, to acknowledge the work of the previous Conservative government in establishing the office of the Small Business Commissioner under the Enterprise Act 2016 and in introducing the reporting on payment practices and performance regulations which require large businesses and LLPs to publish payment data twice yearly. Those reforms were important and necessary steps forward. Now, my Lords, as most noble Lords know, as a former business owner, I know that many businesses across the United Kingdom have benefited from those measures without having to endure lengthy and costly litigation simply to recover money that was already owed to them. But, my Lords, despite those reforms, the culture of persistent late payment remains deeply entrenched in too many parts of our economy. Late payment is not merely an inconvenience, it is a scourge on British business. It costs the UK economy an estimated £11 billion every year. Small business owners spend more than 86 hours each year chasing overdue invoices due to them. Every day, approximately 38 businesses in the United Kingdom close because they run out of cash while waiting to be paid. Behind every one of those statistics is a founder who took a risk, mortgaged a home, invested savings, employed staff, and worked tirelessly to build a business, only to discover that despite fulfilling their side of the contract, they could not survive because payment did not arrive on time. That is neither fair nor sustainable, and this government is determined to act. My Lords, in July 2025, the government launched a public consultation to gather views from businesses, trade bodies, representative organizations, and stakeholders across the country on how best to tackle poor payment practices and improve payment times. The response was overwhelming. Businesses, large and small, across all sectors and regions, made it clear that reform was urgently needed. The measures before your Lordship's House today are a result of that engagement. This bill builds on the foundations laid by previous reforms and delivers on this government's manifesto commitment to tackle persistent late payments once and for all. Its purpose is straightforward: to ensure that when goods are supplied or services are delivered, businesses, particularly small and medium-sized enterprises, can be confident that they will be paid fairly and on time. My Lords, SMEs are not peripheral to our economy. They are the very backbone of our economy. There are approximately 5.5 million SMEs operating across the United Kingdom. They employ about 60% of the private sector workforce and account for around half of all private sector turnover. Yet too often, they operate in a commercial environment where delayed payment has become normalized, in which smaller suppliers effectively act as involuntary lenders to larger organizations with greater bargaining power. This bill seeks to restore that balance, fairness, and accountability to those commercial relationships. Now, my Lords, Part 1 of the bill introduces a maximum payment term of 60 days in commercial contracts, subject to limited exemptions, and renders contractual terms in breach of those rules void. We have listened carefully to businesses and stakeholders to ensure these measures are proportionate and workable. The bill, therefore, includes provisions enabling exemptions for large-to-large business contracts and for circumstances where the purchaser is the smaller party. We also intend to consult on secondary legislation that would exempt contracts relating to imports and exports from maximum payment terms. This is not an attack on legitimate commercial freedom. It is a measured and proportionate intervention to address situations where freedom of contract exists more in theory than in practice because of unequal bargaining power. Businesses cannot pay wages, supplies, VAT, rent, or national insurance with invoices that remain unpaid for 90, 120, or even 180 days. Prompt payment should be the norm in a modern economy, not the exception. The bill also strengthens the existing statutory right to interest on late payment of commercial debts. My Lords, at present, many suppliers are reluctant to enforce those rights because they fear damaging valuable commercial relationships. As a consequence, the law often exists only on paper. This bill removes the ability for contracts to substitute weaker remedies in place of statutory interest of 8% above the Bank of England base rate. That will create a stronger deterrent against late payments and reinforce the principle that delaying payment should carry consequences. The bill further allows suppliers to recover a fixed sum where disputes are raised late or without sufficient information in an attempt to delay payment. My Lords, too many businesses have encountered situations where objections are raised at the 11th hour, not because there's any genuine dispute, but because delaying payment benefits the purchaser's cash flow. That practice is unfair, damaging, and totally unacceptable. My Lords, legislation is only meaningful if it can be enforced effectively. That is why this bill significantly strengthens the power of the Small Business Commissioner. The Commissioner will be empowered to restore or to resolve contractual payment disputes through a confidential adjudication scheme operating outside the court process, enabling small businesses to recover money owed to them quickly and efficiently. The Commissioner will also gain powers to investigate persistent poor payment practices by larger businesses, compel participation in investigation, issue recommendations, give publication and enforcement directions, and in the most serious cases, impose financial penalties. The bill allows regulations to be made to empower the Commissioner to enforce compliance with payment reporting obligation when businesses fail to publish accurate payment data. Taken together, my Lords, these reforms will transform the Small Business Commissioner from a passive observer into an active champion of fair payment practices across the United Kingdom economy. My Lords, the bill also addresses one of the most controversial and damaging practices in the construction sector: cash retentions. Retention payments represent labour and materials already delivered and installed on site. Yet subcontractors and smaller firms frequently wait months and sometimes years for money that is rightfully theirs. In some cases, they never recover it because of insolvency higher up the supply chain. The Construction Leadership Council estimates, my Lord, that approximately £223 million in retention payment is lost annually due to insolvency, while around between £4 to £6 billion in retention is held across the industry at any given time. That's an extraordinary amount of capital being withheld from productive businesses. The bill, therefore, bans retention clauses in construction contracts and introduces a fixed sum payable for any unauthorized deduction from a retention payment. A 2-year transition period will apply before the ban comes into full force, allowing industry and clients time to adapt and enabling alternative surety products to develop in the market. This is an important reform that will improve cash flow, strengthen resilience, and reduce insolvency risks throughout the construction supply chain. My Lords, there is a broader economic case for this legislation. Growth does not come solely from major infrastructure projects or multinational investment. Growth also comes from healthy cash flow in ordinary businesses across every town, city, and region of our country. When small businesses are paid on time, they invest in greater confidence, they recruit more staff, they train apprentices, they innovate, and they grow. Improving payment culture is therefore not simply a contractual issue. It is a growth strategy. It is a productivity strategy, and fundamentally, it is a fairness strategy. This bill strikes the right balance between respecting commercial freedom and intervening where persistent unfairness harms businesses, jobs, and economic growth. This is pro-enterprise, pro-growth, and pro-fairness. My Lords, poor payment practices destroy businesses, destroy jobs, and destroys livelihoods. Too many business owners work day and night, often without paying themselves, I know for one, in reinvesting every penny into their businesses, only to find that they run out of cash because larger organizations fail to pay them on time. This government is on the side of those businesses. We will not accept a business culture where smaller firms bear disproportionate financial risk simply because they lack bargaining power. My Lords, I'm very grateful for the constructive engagement and support received from noble lords across the House through the all-peers briefing sessions and discussions with the front bencher. My Lords, I look forward to working collaboratively with all noble lords during the passage of this bill. And I particularly look forward to hearing the wisdom, expertise, and practical experiences that your Lordship House will bring to this important debate. My Lords, this bill will help ensure that the United Kingdom remains one of the best places in the world to start, build, and grow a business. It will strengthen confidence, improve cash flow, protect jobs, and create a fairer commercial environment for millions of businesses across our country. Businesses that do the work deserve to be paid on time. That is a simple principle. It is a fair principle, and it is a principle at the heart of this bill. My Lords, I beg to move.
The question is that this bill be now read a second time.
My Lords, I declare my interest as set out in the Register, in particular as a partner and practising solicitor with DAC Beechcroft. My Lords, it's a pleasure to follow the noble Lord the Minister, who really not only read from a brief, but spoke from his heart. He has a record that anyone should be proud of in building businesses in the past. And all I would say is that he was very generous in the praise he extended to the previous Conservative government. We on these benches have consistently championed the rights of small businesses. In government, we created a specific duty for contracting authorities to consider small and medium-sized enterprises in competing for contracts. During the pandemic, we directed an additional £69 billion towards support for businesses. My Lords, that belief in small business has followed us into opposition, often in defiance of this government's broader approach to industrial policy, so it is so welcome to see ministers taking a step in our direction. For that reason, my Lords, I say from the outset that we do not oppose this bill. Tackling poor payment practices will be beneficial not only to small businesses, but also to the wider economy as a whole. As the noble Lord the Minister pointed out, an estimated 38 businesses close every day as a result of late payments, costing the country some £11 billion annually. We therefore recognise the need for reforms such as mandatory payment terms and statutory interest payments, both of which should improve cash flow and provide smaller firms with greater certainty. I do, however, recognise that there is a small risk that some businesses may be negatively affected by the changes to late payment rules. Although undoubtedly not the government's intention, the decision to exempt transactions between large businesses risks creating an incentive for bigger firms to bypass smaller suppliers altogether. I would therefore be grateful if when the Noble Lord the Minister comes to sum up the debate, and I, like him, look forward to the contributions on all sides in this debate, I would be grateful if he could address whether the government has considered this possibility and what safeguards could be created to guard against such an outcome. Similarly, my lords, in a number of countries where mandatory late payment terms have been introduced, they have in practice tended to become accepted payment dates rather than genuine deadlines. Instead of encouraging prompt settlement, they have occasionally encouraged businesses to delay payment until the final permissible day. I hope the Noble Lord the Minister will address this concern in his reply, and I look forward, as he does, to engaging constructively on these matters throughout the committee's stage. My lords, could I also please ask the Noble Lord the Minister for some clarity on the 60-day payment term? There is often a discrepancy between when a business does a payment run and when the bank actually makes the payment. There are instances where unforeseen delays cause the payment to overrun the 60-day window, after which statutory interest is automatically applied. So can the Noble Lord the Minister confirm whether the 60-day deadline ends when the payment is made or when it is received by the supplier? And does the legislation account for delays due to payment runs or payment systems delays? Perhaps these points need more clarity within the bill's drafting. My lords, we similarly support the abolition of retention sums within construction contracts. We recognise that retention payments are often far smaller than the actual cost of defects, and also that they have increasingly become less a form of genuine insurance and more a mechanism for unilaterally transferring risk onto smaller contractors whilst preserving working capital for larger firms. That does little to improve either quality or productivity within the construction sector. Despite this, my lords, we do recognise that retention payments have on occasion served as a legitimate, if limited, form of protection against defective work. In the construction industry, where the cost of errors tends to range between 5 and 25% of project value, the importance of ensuring that adequate protection against shortfalls is available is self-evident. Given the retention option is being removed from construction contracts, would the Noble Lord the Minister please explain how the government intends to ensure that defects within construction projects will still be rectified by those responsible? And my lords, just turning for a moment to the changes proposed to the Office of the Small Business Commissioner, bringing upwards claims into its remit is welcome, as are the new powers to enforce compliance and distribute fines for non-compliance. The success of these reforms will ultimately depend upon resources. greater powers and greater responsibilities must be accompanied by adequate funding. The former without the latter risks creating backlogs, inefficiency, and ultimately discrediting the important work that the Commissioner's Office exists to carry out. I therefore hope that the Noble Lord the Minister will be able to assure the House that sufficient resources will accompany these expanded duties. My Lords, I also wish to address some broader points concerning the government's overall business policy. This bill is undoubtedly a step in the right direction, but I feel able to describe it as a small step only, because it must be seen in the broader direction of the government's overall legislative programme. This is a bill that rightly seeks to support small businesses in competing fairly with larger firms. It seeks to improve cash flow, and it seeks to engineer greater and fairer symmetry within the market. These are worthwhile and sensible objectives. It is a great pity, my Lord, that those very principles should be in such obvious contrast with almost every other area of government policy. Now, small businesses will welcome this bill, but it will do little to relieve the broader pressures under which they are currently having to operate. Industrial electricity costs in the UK remain among the highest in the OECD, driven by a combination of high green levies and continued reliance upon intermittent energy generation. The consequence is that large sections of our manufacturing and construction sectors are becoming increasingly uncompetitive and, in some cases, simply unprofitable. At the same time, the minimum wage has continued to rise significantly beyond the rate of inflation, discouraging investment in youth employment and training opportunities. For sectors such as construction, which already endures one of the highest turnover rates in the United Kingdom, this is particularly damaging. Businesses cannot continually absorb rising labour costs while simultaneously facing higher energy prices, increased taxation, and ever-growing administrative and regulatory burdens. So, my Lords, I must also return once again to the Employment Rights Act. The government's own figures suggest it will impose over £1 billion in additional administrative costs upon businesses. And many of us suspect that that figure may ultimately prove to be a significant underestimate. Those costs will inevitably fall most disproportionately upon small and micro businesses, which lack the legal resources available to larger corporations. When the qualifying period for unfair dismissal is reduced to 6 months, many small businesses simply will not possess the capacity to manage or even adequately to assess the additional risks involved in hiring. Now, 6 months was a compromise, a late and welcome compromise, but it still will operate to make employers think twice and twice again before hiring people. At a time when economic growth remains weak and business confidence fragile, that is deeply concerning. Given the stated intent of this bill, namely to help smaller businesses survive, I do hope that over the coming weeks, the Noble Lord the Minister will be receptive to measures exempting some of the most vulnerable businesses from further measures within the Employment Rights Act that stand to be triggered by secondary legislation. Therefore, my Lords, whilst we do welcome this attempt to improve market practices and enhance protections for small businesses, without cheaper energy, affordable labour and proportionate employment regulation, the effect of these reforms will inevitably be limited. We therefore hope that this bill marks not merely a an isolated intervention, but the beginning of a broader change in the government's outlook towards the wealth creators in our society, without whom no progress is possible. This legislation is founded upon sound principles. I only hope that those same principles will come to guide future policy more generally across the full field of industrial and economic strategy.
May I too welcome the powerful, lucid, passionate way in which the Noble Lord the Minister introduced, based from his own experience, the need for this bill and the principal purposes behind it. May I also say what a great pleasure it is to follow Lord Hunt in his exposition of some of the problems that he has encountered from his long experience as a senior and distinguished lawyer, because at the heart of so many legal disputes is the desire to delay payment. I want to raise a point that hasn't been raised, coming from much more recent experience, and experience in this, primarily in this House. It's this. The notes to the King's speech say, the measures apply only to UK business transactions and do not affect global supply chains or international trade. Now, the 1998 Act, which this Act seeks to amend, that's the Late Payment of Commercial Debts Interest Act, applied by that, provisions of that Act, to all business-to-business contracts governed by English law, or I should hastily add, laws of the other parts of the United Kingdom, provided that there was a connection in the contract with the United Kingdom. My understanding is that it is intended that effect will be given to what is said in the King's speech under regulations made under the new Section 2E of this, which is to be inserted by Clause 3 of this bill. And it is intended thereby to exclude all non-UK business-to-business contracts and thus achieve the result of excluding international trade from the scope of this bill. The point I wish to raise is to question whether that is a sensible and desirable policy, given the changes in technology, recent legislation, and given the current emphasis on the need to strengthen the participation of SMEs in exporting and importing. I would hope that Her Majesty's Government would wish to take a position to promote a modern policy in tune with the government's ambition to be leaders in the digital age. I would hope we would not be seen as laggards. I therefore suggest that we might need to look at and should consider an amendment to the bill to remove the power to exclude from the regulatory powers of the bill the exclusion of international trade, both import and export, or at least to provide a sunset for that provision. Now, can I explain the experience that has led me to this view and declare my interest through it? My experience is derived from my chairmanship of the Special Public Bill Committee on the bill that became the Electronic Trade Documents Act. Since that time, I've taken an interest in trying to encourage the head start that the Act gave the United Kingdom in revolutionizing documentation and payments in international trade, particularly financing, trade, and the speed of payment, that being particularly important. One of the avenues through which I have tried to do this is to assist in the implementation of the Act as chairman of the Advisory Volunteer Board of the International Centre for Digital Trade and Innovation. The Electronic Trades Document Act was a Law Commission bill, the purpose of which was to legislate in the United Kingdom to bring about a legal regime absolutely consistent with the UNCITRAL Model Law on Electronic Transferable Documents 2017, but in a way that retained the historic flexibility of English law, was consistent with the law of Scotland. It's a very, very short act. It's 7 clauses over 3 operative pages. It's a pleasure to see that will follow me in speaking in this debate 2 members of that committee, Lord Lansley and Lord Holmes of Richmond. Now, the regime under the model law replaces the centuries-old traditional way in which we traded, using paper bills of lading, paper bills of exchange, paper certificates, which had been used since the 13th century for trade. It's a long tradition, and long traditions take time for people to get used to. But we must get used to it, and this bill is an important step in seeing, an important opportunity in seeing how we can bring about the new system. The new system replaces the old one with electronic documents, making the process entirely electronic. It provides better and easier access to finance. It ensures vastly speedier payment. It provides greater security than the traditional paper-based documents and reduces the cost. And if one wants to see a snapshot of the way in which the system works and the advantages it brings, it's set out in a short and very easily digestible recent report of the Teesside University Digital Trade Testbed and a project undertaken with the Centre for Digital Trade and Innovation, the ICC, and Her Britannic Majesty's Embassy in Japan and other stakeholders in Japan. Now, this regime to which the Act made the UK a party is already in force in many leading countries with which we trade: the United States, Japan, France, Germany, Singapore, and much of the Gulf. And its implementation is before legislatures in many other countries, including India, Australia, Canada, Mexico, Spain, China, and Turkey. Now, we have, because we were one of the first to get going, an undoubted leadership. It indeed was a pleasure. I'm sure the members of the committee will recall the fact that the French came over to see how we were doing this work in implementing the bill. And huge work is being done by the Centre for Digital Trade and Innovation and others to promote the use of digital documentation. But it needs more support. The UK needs more support in this. It was something that the then Department of Digital Culture, Media and the Sport did, but it really does now need support from the new department. It is important, I think, to realise that this bill, that dealing with this matter in this bill would bring huge advantages. First of all, it would encourage SMEs to engage more in import and export, as payment terms would be the same as domestic trade. One does not want to see a differentiation. Secondly, it would encourage the move to electronic trade documents in the UK with the great advantage that it brings. Thirdly, it would promote the leadership we already have in electronic trade documents. Fourthly, it would bring Her Majesty's government visibly behind that move to electronic trade documents. Fifth, it would tie in with the move which HM Treasury is encouraging or insisting on in moving to e-invoicing, which is to be compulsory under the VAT regime. And sixthly, it would help achieve a part of Her Majesty's government trade strategy, where it's stated in reference to the use of digital documentation. The London School of Economics estimates that global adoption of digital trading systems could boost the UK's GDP by up to 0.9%, and even partial adoption could significantly impact the UK economy. I'm extremely grateful to the Minister for his engagement on this point, and I look forward to further discussions before and during committee on how we can bring into this bill, or at least prevent this bill excluding trade, because it is so important, not only to the way in which we should be encouraging import and export business, but to our leadership in the electronic age. I therefore look forward to hearing the views of other noble lords on this subject and to engaging further in bringing the modern age into this bill in comparison with the scourges that the two speeches that have preceded me have addressed.
Begin with my register of interests. I chair the JIB, the Joint Industry Board of the Electrotechnical Sector, which brings together employers and unions operating in the electrotechnical, engineering services and built environment sectors. And our employer members are a critical part of the construction supply chain. Many have felt the burden of late payments and retentions. So I want to begin by congratulating the government on the bill. Noble lords will be familiar with Ronald Reagan's lampooning of "I'm from the government and I'm here to help you." And so new regulation often engenders business scepticism. But when it comes to tackling late payments, there is a broad consensus. It's past time to update the well-intentioned but in practice ineffective legislation put in place at the end of the last century by the last Labour government. SMEs have been calling for further government action for over a decade, and so this bill will now deal with outdated and ineffective legislation. Echoing my noble friend the Minister, a shocking quarter of all firms are impacted by late payments. The bill will bring relief to 1.5 million small businesses every year. Shockingly, late payments currently lead to over 14,000 businesses closing each year, and the total cost of late payments is estimated to be a whopping £11 billion each year. So this bill, as Lord Hunt graciously acknowledged from the benches opposite when speaking about the bill before us, this is a valuable economic pro-growth measure. When the bill reaches the statute book, it will advance the government's ambition for Britain to be one of the best places to start a new business. And Britain will then have the most effective late payments regime in the G7. Knowing that payments will be made on time means that British businesses can rely, indeed bank, for that is the right word, on better cash flow, thereby releasing income for investment in capital and people. By delivering enforceable penalties, the bill can change our payments culture. My Lords, I mentioned that 1.5 million small businesses are impacted each year by late payments. 900,000 of those are in the construction industry. So the bill, as the Minister has made clear, will also tackle retentions in the construction industry. Retentions are justified, as Lord Hunt made clear, as security against defects. And of course, high quality on-time performance does matter. But retentions, as I say Lord Hunt has recognised, are not a neutral accounting mechanism. In practice, they starve supply chain small businesses of cash. They remove cash from companies that are often working on very thin margins. The practical impact of retentions is to remove liquidity from businesses that need that cash to pay staff, pay apprentices, suppliers, and pay tax and financing costs. So retentions expose small businesses to insolvency risk and impose a costly recovery burden that is often disproportionate to the sums at stake. These retentions are not a marginal issue. In the impact statement and in evidence to the other place, retentions are estimated at up to £8 billion a year. 50% of construction supply chain contractors experience partial or full non-repayment of retentions, and the construction industry experiences the highest number of insolvencies of any sector in the UK economy. So this bill, as the Minister acknowledged, goes to the heart of building a construction supply chain that's resilient. It will stop dominant players using market power through contractual complexity, payments delay and retention practices to fund their own working capital at the expense of smaller firms. So the bill, if properly implemented, can tackle these issues once and for all. No longer will money earned by small companies become free working capital for the larger firms. The bill can deliver not simply a legal change, but a significant productivity boost. But as in all opening speeches noble lords have noted, the devil is in the detail. So in my remaining time, I would like to ask the Minister about issues to which I hope we can return during the subsequent stages. My queries relate to enforceability, avoidance and remedies. First, on enforceability. As the Minister is aware, whilst the Small Business Commissioner has been an excellent advance, construction disputes are out with the Small Business Commissioner's powers due to the separate existing statutory construction adjudication arrangements. However, this existing construction adjudication regime is largely inaccessible for lower value claims. So can I invite the Government to consider measures that this enforcement ban that they are proposing will also be available to small construction supply chain companies? And is this the moment to consider when the Small Business Commissioner should also have some jurisdiction in construction? Or could the Commissioner have a supporting role in construction payments behaviour, even if the formal adjudication regime remains under the Construction Act? Let me turn to the second area of avoidance. If the bill is to fulfil its promise, it must prevent disguised or backdoor retentions. So, does the Minister agree that the definition of retention in the bill should be widely interpreted by the courts to ensure that contractors don't try and reimpose retentions by another name? In that service, will the Government commit to monitoring avoidance behaviours, including where main contractors seek alternative forms of security which could be more expensive, more complex or simply unavailable to small companies? And can I encourage the Government to use the secondary legislation powers in the bill expeditiously when new backdoor retention practices emerge? Thirdly, and finally, can I come to remedies? The construction industry's payment regime is already highly complex. It involves 5 dates and 2 notices. As the Minister has acknowledged, the bill proposes to layer on top of that a further 2-year transition arrangement. So can I encourage the Government to consider simplification of these transitional arrangements to ensure that small businesses can follow the changes without having to pay for specialist lawyers? Can I conclude? The bill is a significant development in the Government's plans for supporting growth. It will improve Britain's payment culture and support all small and medium-sized enterprises. It will improve supply chain resilience, it will reduce insolvency pressures, and it will support a more productive economy. I commend it to the Chamber.
My Lords, I'm very pleased to follow Noble Lady Baroness Alexandra Clevedon, who I thought made some very important points about the enforceability and the escaping avoidance of the provisions. But I will come on in a few moments maybe to talk about some of the other issues that are raised by the proposed ban on retention payments. Can I also say I'm very pleased to follow my noble friend for these purposes, Lord Thomas of Cumgead, with whom I did serve on that special committee on the Electronic Trade Documents Bill, and I think from what I heard, I entirely agree with him of the importance of us trying to see the progress that we're making under English law of securing electronic dispatch of documents being reinforced through the mechanisms that we're bringing into force in terms of in relation to payment terms. Can I just say, can draw attention to my register of interests. I am a director of a small business and the chair of the Cambridgeshire Development Forum, although I should again emphasise that I don't speak on behalf of any of the members of that forum. My views are entirely my own. Can I just say, I think as my noble friend on the front bench may have done, we've worked on this issue from time to time over quite a long period. Not just in parliamentary sense. I was once upon a time the Deputy Director General of the British Chambers of Commerce, and I do remember back in the late 1980s talking at length to David Trippier, who was then the Small Firms Minister, about the introduction of the Code of Practice on payment of bills on time. And I think it's fair to say that where we are now, all those years later, has demonstrated that while it has always been desirable for us not to proceed by way of legislation and making payment terms mandatory and interfering in contractual terms between businesses, in practice, we were never effectively able to overcome the obstacle that many small businesses would not challenge the payment terms of large companies to whom they were suppliers. And we have to be prepared to step in. And I think that is indeed, as other noble lords have said, that is where the Small Business Commissioner is a very important addition to our armament. And the work of the Small Business Commissioner and her team, I think, are really central to ensuring that small and medium enterprises can be protected because they are not themselves having to raise complaints against their larger customers. So I do hope that we thoroughly support the greater powers for the Small Business Commissioner. I would just ask the Minister whether the Small Business Commissioner, in terms of the interventions that the Commissioner can undertake, whether there is a means by which that might be prompted and supported occasionally by working with the large audit firms. We do know, of course, that longer payment terms tend to be longer in larger businesses. And, of course, when the audit firms are examining larger businesses, it would be possible for them to sample their payment terms and to report to the Small Business Commissioner so that the Commissioner's team can, where necessary, investigate particular large firms without necessarily having to do so off the back of a complaint by a particular supplier. Can I just say a couple of, just one other principal point about payment terms. The government has chosen the 60-day approach, not the option to move over time after, say, 5 years or so to the 45-day approach. I've been trying to work this out in my head, and I'm sort of thinking about it as simply in practical terms. If one is as a company in receipt of an invoice in the first part of the month, it should be paid at the end of the month, and quite often companies have end-of-the-month payment runs and often rest on that as an excuse sometimes for delay. But if it's in the first part of the month, it should be paid by the end of the month, and if it were to move to the following month, it would exceed 45 days. If, however, one receives an invoice in the latter part of the month and it passes over the end of the month and the payment run, it would go to the end of the following month and therefore would probably just about fall within 45 days. So thinking about it in practical terms, it always seemed to me that 45 days ought to be the logical maximum payment term, and I'm not quite sure I understand where 60 days really comes from in relation to the practicalities of when one receives an invoice. So I do hope we might think carefully about whether moving to 45 days might be better in the long run. Just one point on, or an important point from my point of view, on retention payments. I've never been, I have to say, persuaded, and I'm still trying to be persuaded. I think I would be more persuaded if I felt confident, as my noble friend on the front bench was saying, that we had other mechanisms for dealing with snags and defects. Now, in that context, perhaps, if not today, then in further discussion, we might look at whether the government is in a position now to activate fully the New Homes Ombudsman scheme under the auspices of the New Homes Quality Board. I'm very much persuaded of the value of this. Many major contractors are signed up to the scheme. I think we're pretty close to the point where it could be made essentially a nationwide and mandatory scheme, and that might well give people the assurance they're looking for about de-snagging for residential dwellings, which is an abiding problem that many people buying new homes have to put up with. But as far as retentions are concerned, I was in receipt of a brief from the National Housing Federation. We were talking about social housing last week, and I noted that with some concern, that they shared the concern which I have, and let me quote them. Of course, the National Housing Federation represents housing associations of registered providers, generally speaking, providing social housing. And they said, and I quote, "Retention clauses are one of the strongest practical mechanisms housing associations have that enables them to hold developers to account on good quality standards, strong aftercare services and agreed delivery timelines for Section 106 homes." And noble lords will recall that the Section 106 obligations of developers is the single largest mechanism by which we provide affordable and social housing. And the National Housing Federation went on to say, "A ban on retentions clauses will increase the risk for housing associations buying Section 106 terms." Well, we know that housing associations buying Section 106 contracts is a particular problem, that they have lacked the cash resources to do this because they are so busy trying to remedy aspects of their housing stock and meeting building safety requirements. So I would ask the Minister just to reflect very carefully on whether we can deal with the problems raised by the National Housing Federation. They look for an exemption for registered providers. This is not a small exemption, this would be a substantial exemption. But I just want to be sure that we don't do something which would inadvertently further inhibit us in providing the social housing which, as we all know, is at the same time as we are supporting the business community. We know we absolutely do need to increase the supply of social housing. So with those reservations for the moment about and questions about the ban on retention payments, I just want to say how much, generally speaking, I welcome the bill that the government has brought forward, and I do hope that the House will give it its fulsome support.
My Lords, I'm very pleased to welcome the Commercial Payments Bill and to take part in this second reading debate, and congratulate my noble friend the Minister for his absolutely outstanding introduction to this bill. I intend to make 2 points about why this bill is so important to our business community, particularly those seeking to establish and grow enterprises of all kinds, small businesses and social enterprises. But first I want to say I support this legislation for personal reasons. At a very early age, I was aware of the importance of invoices being paid in good time. My dad, Peter Thornton, was a master plumber who set up a plumbing and building business in Bradford when I was a child. It was a successful business, growing to employ a few dozen employees and providing apprenticeships in plumbing, electricians and brickies, of which I have to say he remained very proud for the whole of his life. Even at 10 years old, I was aware that there were moments in the early days that customers delaying payment caused anxiety and belt-tightening times at home. And sad to say, some of this, I have to say, was the local authority dragging its bureaucratic feet and not paying bills in a timely fashion. Many years later, and having worked on a freelance basis and self-employed, I set up my own small business with a business partner. And I think we were a micro business, I think we employed 10 people at the most. We're a very happy company. But again, my business partner and I had moments of anxiety caused by clients delaying payment of invoices, dragging their feet, and particularly large companies who did not recognise the effect as an extra 30 or 60 days or delays which were arbitrarily imposed had on our company and its cash flow. But my second reason for supporting this bill is the founding chair of Social Enterprise UK, of which I'm now a patron, and currently vice chair of the Social, Cooperative and Community Economy All-Party Parliamentary Group, and a senior associate of E3M, an organisation which supports social enterprises contracting to deliver public services. Social businesses are businesses, my lords, many small, who face the same challenges as all SMEs. They seek to make surpluses like any business. The thing that distinguishes them, of course, is what they use those surpluses for, which indeed is to fulfil their social purpose. But equally, they depend on the timely payment of invoices and suffer in the same way that that many noble lords have spoken of, including my noble friend the Minister, about delayed in non-payment and the unfairness of that, sometimes with disastrous consequences. During a recent consultation by Social Enterprise UK about procurement, they asked, to what extent do you agree or disagree that requiring contracting authorities to exclude suppliers from bidding on major contracts if they cannot demonstrate prompt payment of invoices to their supply chains within an average of 60 days? Would that help improve payment by suppliers to the public sector? And of course there was agreement about this. But one of the comments that came in, and I'm glad I'm following the noble Lord Lansley to saying this, a 60-day requirement, I'm quoting here, should be a minimum. We would like to see it set at 30 days. This reflects what the Fair Payment Code recommends for SMEs and would also reduce barriers for social enterprises where healthy cash flow is crucial and late payments are often a barrier to entry. We would also suggest altering the wording of this recommendation to a maximum of 30 days rather than an average of 60 days to reflect the importance of prompt payment of invoices, which is why I'm pleased I followed the noble Lord Lansley, who at least suggested 45 days. And I think actually thousands of SMEs would agree with that quotation. So I would seek assurance from my noble friend the Minister that this legislation will of course apply as much to social enterprises, cooperatives and community businesses as all other businesses. And on that note, I welcome this bill and I wish it speedy progress through the House.
Can I thank to the noble Lord, the Minister, for the passion and eloquence with which he introduced this bill. And my Lords, it's a pleasure to follow the noble Baroness Thornton and other noble Lords. When I began my career in banking, I actually had to work out cash flows and balance sheet ratios and things for businesses manually. Now, which to anyone under the age of 40, that is pretty Neanderthal. And it seemed it at the time. But I remember being told early in my training that debt never killed a company. It was always a lack of cash. Now, you might say a banker would say that, and there is, of course, a relationship between debt and cash, but it's a simple lesson because it's true. And so, my Lords, I welcome the thrust of this bill and the provisions within it. The latest British Chamber of Commerce survey shows that 3/4 of all businesses report late payments, and 1/4 of all businesses report that late payments are having a direct impact on their operations or ability to grow. So the proposal in this bill to set a cap on payments at 60 days can only be welcomed. It will, of course, be important for business to clarify the scope of any exemptions, as the Minister has said, and we will have to be mindful of how enforcement might impact on commercial relationships, and especially between small suppliers and much larger customers. I also welcome the provisions in the bill to strengthen the role of the Small Business Commissioner beyond guidance to more effective enforcement of prompt payment practices. Increased transparency backed by enforcement powers can again only be welcomed. My Lords, it was the provision in the bill to abolish retention payments in construction contracts that I found especially interesting. And here, my Lords, I must declare my interest. I'm a director of Helen's Residential, a for-profit registered social landlord, part of a larger property group, and I'm a shareholder in a small regional house builder based in the northeast of England. My Lord, the construction business model is not an enviable one. As my noble friend Baroness Alexander said, it is a low-margin business. Last year, margins in the largest 100 construction firms were just 2.4%, up from 1.9% the previous year. You are paid in arrears, you have a negative cash flow, and therefore have to have ready access to working capital. And your clients are sometimes debt-funded and illiquid in nature themselves. When building anything from scratch, you can take on all the risk of what is under the ground, which is the riskiest part of construction. Construction inflation over the last 5 years has been almost 40%, with inflation in key materials such as steel, timber and concrete hitting 60% over the same period. In short, it is not an easy sector of the economy in which to make money. And I am reminded of, I think it was Warren Buffett's remark, that when a chief executive with a great reputation joins a company in a sector with a poor reputation, it is the sector's reputation that will prevail. Construction in the UK represents about 4% of the economy and employs just under 1.5 million people. It is one of the diminishing areas of the economy where school leavers can learn a trade that can provide them with an adequate standard of living and, if they wish to, career progression. And yet, as has been mentioned, despite accounting for just 4% of GDP, construction accounts for nearly 17% of all insolvencies in England. And current levels of insolvency are around 20% higher than pre-pandemic levels. So any changes to the business model must be considered carefully. But anything that improves cash flow in construction companies, which, as a number of noble lords have said, be welcomed in principle. Now, retention payments are monies held back by the customer until work is completed. They are typically around 3% of large contracts and up to 5% for smaller contracts. So the sum held back is usually larger than the profit margin in the business. Half the sum, however, is paid when practical completion has been certified by an architect or a QS. That means the job is finished, so half the retention is paid over at that point. However, the other half, and it is the other half of the retention payment, is held by the customer until the defect period ends. And that's the period for which the contractor has to return and fix any faults. It's typically 12 to 24 months. Now, often defects can take time to emerge. For example, to building work completed in spring, it might not become apparent until winter that there is a problem. But in essence, around 2.5% of the contract sum is retained during the defect period. If a window falls out or a heating system fails or an elevator malfunctions, the contractor is called back to rectify the fault at their own costs. Now, this means they have to pull people off another contract, which delays that contract, get them to site, which could be miles away, and frankly, it's very inconvenient for them, and it can be quite expensive. They will turn up, sometimes reluctantly, and for smaller developments, it's often the fact that the customer still retains half of the retention payment that incentivises them to show up at all. If you've ever tried to get a plumber back to your house 3 months after you thought they fixed your boiler, you kind of get the picture. And although the industry is known for its disputes and resort to contract arbitration, in practice, companies usually try and take a commercial view to disputes. The fact that some monies are retained incentivises a pragmatic approach to resolving disputes. So I do have one question for the Minister, and it relates to behaviours. Now, the Noble Lord Hunt touched on this, as did the Noble Lord Lansley. Can I ask how, in the absence of retention payments, a contractor will be incentivised to return to a site and correct defects at their own expense, short of a customer resorting to legal or other contract enforcement action? I think the Noble Lord, the Minister, said The transition period will give time for alternative mechanisms to be given. I very much look forward to hearing more from the Minister in his response, if not now, then in the Bill's later stages. My Lords, that notwithstanding, I very much support the principles of these changes. I'm pleased to note both the British Chamber of Commerce and the Federation of Small Businesses broadly welcomes this bill. The provisions in the bill are practical and sensible. They show a real commitment from this government supporting UK business, and I welcome them.
My Lords, can I welcome this bill and refer your Lordships to my business interests, which are largely the SME sector, as set out in the register. And can I thank Lord Leong for his very gracious remarks about the contribution the Conservatives have made to this bill and the continuing line. I think I ought to fess up. I'm not sure the Conservatives have always led the way in this. I remember going to a speech that Lord Heseltine, not in his usual place, gave, and it was literally 30 years ago, but it was such a powerful speech, I can remember it. And it was at the Institute of Directors and the largely small businesses there. And he was describing his business career. And he explained that when he started off, he had a ledger of bills payable. And he listed all the bills payable. And the first column was bills 30 days. And the second column was bills owed 60 days. Third column was bills 120 days. Fourth column was bills where solicitor's letter had been received. And fifth column was winding up order being received. And he said to the Institute of Directors, gentlemen and ladies, he said, my advice to you to be a success in business is only pay the bills in the fifth column. Not a great precedent, but a true story. So this is an important bill, and I believe it will be supported by a cross-party basis, and it's something close to my heart, not least like the noble Lady Baroness Thornton said, because of my family history. Like many people in this house, I come from an entrepreneurial family. Both of my grandfathers were originally in the furniture business, which led to my mother, after a successful career as an actress, decided also to go into the furniture business. And she discovered that in the East End of London in the 1970s and 80s, there were a large number of craftsmen who made reproduction furniture. They worked under the railway bridges, and they made, some of them manufacturing reproduction furniture with the wood, some doing the brass, some the lining, and some doing the glass. But they weren't combined, any of these businesses. So she started taking furniture from one craftsman to another, and then took them all the way from the East End to the West End to sell it. And none of those manufacturers could imagine going up west to sell their products. So she took the furniture there and sold it to the large department stores. Now, it was a big learning curve for her, and she had a great eye for business, and she had certain business acumen, but she didn't have much business experience, and she was busy juggling a family life. So it turned out at the first meeting with the buyer in this upmarket West End department store was during the school holidays, and she was obliged to take my younger brother. The meeting went well, and an order was about to be placed until the experienced buyer said to my mother, "Now, Mrs. Lee, what are your terms?" And she had no idea what that meant. Fortunately, my younger brother, aged 12, was in the room, and he piped up 2.5% 30 days, 5% 7 days, which fair enough, said the buyer, and the order was placed. Now, in those days, it was absolutely normal for a discount to be given for payments made in anything like a reasonable time. Needless to say, the buyer took the 50% discount and paid 60 days later. Sadly, there was not much that could be done about it. In fact, most businesses, as has been said, didn't have the resources to cope with that sort of thing, particularly in the days of very high interest rates. So late payments is in my family folklore. And clearly businesses need to have this situation remedied, but I can't help feeling, as perhaps others do, that it's a shame that a common sense issue like this needs some 60 pages of legislation to be regularised with some quite turgid and difficult clauses, and the heavy-handed government has to come in for reasons everyone does understand, but it's regretful that this is necessary. There is a huge amount to discuss in this bill, and I will come on to later some matters which are not in this bill, but perhaps might be. So let me just focus on a particular area, which is the role of the aforementioned Small Business Commissioner, which comes from the Enterprise Act 2016, and I see one or two veterans on the other side of the House familiar who were working on that Act at that time. I note that the government's using the definition of SMEs from the Procurement Act in 23, but there are quite a lot of definitions around of SMEs, for example, in the Companies Act, and we have, of course, the term the less complex entities, which is used by standard setters elsewhere. So perhaps the government could start off by just trying to find one definition for SME companies. And as my noble friend Lord Lansley has pointed out, that the concern is, of course, that most small businesses, frankly, just won't have the time or energy to use an adjudication system in the way the government anticipates, and they won't want to enter it because they won't want to get into conflict with their customer. And in a perfect market, of course, the customer can choose which supplier they prefer, and no supplier wants to be deemed to be part of the awkward squad. So I don't understand how this will work in practice, and I'd be very interested to hear from the Noble Lord the Minister his thoughts. It would seem to me that by the time anyone's brought a specific complaint to the Small Business Commissioner, that complaint will have been settled long since if it's about late payments, because all we're talking here is timing, not whether or not the debt is actually due. So will the SBC have a 24-hour service, 7-day a week? I'm keen to know more. Some of this, of course, might be covered in the regulation not yet published, which Clause 18 anticipates. And once again, the government is, of course, tantalising us with what might come at a later date. And I very much hope that we see drafts of these regulations as the bill progresses through your Lordship's House, because in this particular instance, as ever, the devil is in the detail. It's entirely possible that the proposal for adjudication may be redundant unless a quick and effective mechanism is put into place. What's particularly interesting to me is Chapter 2 of Part 2, which is to allow investigation into payment practices, not specific instances, but the whole practices. And it's not quite clear from the bill exactly what would trigger an investigation and who can trigger it. The bill talks about a large business can be investigated where it persistently, I quote, persistently engages in poor payment. But what does persistently mean? I think we need to know that. The wording in the bill and the explanatory notes, which I have read, aren't clear on this. And worryingly, it allows the Small Business Commissioner not to progress matters if, quote, it feels it doesn't have the necessary resources. Now, that can't be satisfactory because, of course, it's less likely to have the necessary resources in respect of a very large business. And why should they get off? Simply because the SBC feels it doesn't have the necessary resources. So I look forward to debating this in other areas as the bill progresses, but I did mention I want to raise something that's not in the bill and might be, which is particularly relevant in the respect of the relationship between SMEs and their large customers. There is a very growing and worrying trend for large companies to force their suppliers to comply with certain conditions which they feel are obligatory, whereas small suppliers might take a particular different perspective. Now, this obviously applies already in areas such as the modern slavery requirements, but it's now being applied to those who have signed up for the UN Sustainable Development Goals. We are halfway to the 2030 deadline for hitting those goals, and it's true that we're only on track to meet 12% of the targets, so there might be panic setting in. The 17 goals set out by the UN are a worldwide initiative of generally apple pie good things, such as ending poverty, protecting the planet, and to use their words, ensuring that all people enjoy peace and prosperity. Not quite sure that every SME can achieve that, but anyway, that's the aims of the UN Global Impact Compact. And the problem seems to me that CEOs of large companies have clearly been persuaded to sign up, maybe over a long lunch at Davos or by their PR agents, but are now forcing SME suppliers not just to comply with these goals, but to evidence that they're complying with these goals, and they are forcing them to attend webinars, to go to seminars, and to set out specific goals which they then have to explain to their customers that they have achieved. And I've talked to SME businesses who really regard this as wholly inappropriate, are struggling to be able to do business with larger companies who force them to undertake this sort of work, and they just don't have the resources, but are frightened to speak up because they don't want to lose the business. But they are responsible people who carry out their business in their own way and take care to undertake business responsibly. So why should they have to go through all these hurdles just to supply a product or a service to a larger company? Artificial barriers of entry are thus being created and are detrimental to SME businesses. So I am sure the Noble Lord the Minister is aware that large companies are forcing their suppliers to comply with these UN Global Compact requirements, and people are just being forced into training and taking other costs that are unnecessary. So would you consider requiring such companies to disclose where they are forcing their suppliers to enter into these compacts? I accept that we don't want to make large companies to have to do more work in their annual reports, which already the average annual FTSE 100 company already has 97,000 words in it. I accept that. But nonetheless, we have to I think there has to be a line drawn against this behaviour. So in closing, can I particularly thank the Chartered Institute of England and Wales, of which I am a member, Make UK and the British Chamber of Commerce for their assistance to me to date, and very much look forward to working with the Noble Lord the Minister, who I'm sure will bring his extensive business expertise to this debate.
My Lords, what a pleasure to follow my noble friend, Lord Lee of Hurley, and to hear some of his family history. I always suspected that he was a big fan of sofa government. My Lords, can I declare my interests are set out in the register as variously advisor to the Crown Estate and Darver PLC and Simmons & Simmons LLP. And can I give more than warm congratulations to the Minister for the way in which he not only clearly and precisely set out the provisions of this bill, but he did it with such experience and expertise. And in all my dealings on previous bills, I've always found the Noble Lord the Minister passionate, constructive, practical, and a pleasure to deal with. That will certainly be the case for the negotiations we have coming up on this bill. My Lords, it's a good bill and I welcome it, but to mash up my biblical references, it is full of good intentions, but we all know what good intentions have the potential to pave, and has already been noted, the devil is in the detail. To go to some of that detail in the first instance, why is it that if you are a small or micro entity, you have 60 days payment term maximum, whereas if you are a public authority, you have 30. Now, I'm a big supporter of public authorities. The roles and responsibilities they have are extraordinary, and the difference they make to people's lives on a daily basis is to be absolutely applauded. My old man worked for a local authority. It's in the blood. But they're in a very different circumstance to micro entities when it comes to late payments. Not ideal, but less likely to break a public authority in the same way that we see those 14,000 businesses year on year, 14,000 tragic stories for all those individuals involved, and how that ripples out through their families and through their communities. Secondly, can I ask the Minister, why, when it comes to the penalties, does the bill specify 1% of UK revenues? As has already been noted by Lord Thomas of Cymru in his excellent and powerful speech, we need to not only consider the international context from a trading perspective, but to understand the modern environment in which we're working in. And I would ask the Minister, do we not need to see something in this respect that is consistent with approaches that have been taken in other pieces of legislation, such as the Online Safety Act, which looks to global turnover in this respect? My Lords, this bill is positive. with many good intentions, which I welcome, but it could be made so much more powerful and impactful if it had the golden threads of inclusion and innovation running right through it. And so many of the intentions of the bill would be massively benefited from AI, data analytics, and inclusion by design. Take, for example, structured payment event data. AI could perform such a profound service to the intention of the bill in this respect. Take the Small Business Commissioner's enforcement action. That will result in a rich disputes intelligent database, ripe for data analytics to be applied to it. My Lords, it's worth considering a number of no's which are currently in the bill, which through amendment we need to convert to yeses. Firstly, there's no digital layer or auto enforcement provisions. The tasks and the responsibilities that are being given to the SBC largely and currently very much will the end, but without the provision of the means, those means in terms of resource, funding and technologies, to set out just three. When one considers the caseload, the amount of data which the SBC will have to engage with, this is completely impossible without sophisticated AI, without digital case selection tools, and so on. Can I ask the Minister, what is the government's intention in this respect? And would it not be better to see some more of this at the principles layer, without going into the depth of the detail, but in the principles layer on the face of the bill? A second no, there is nothing in terms of the data architecture required to optimise the solutions that are sought in this bill. It's currently structured in a self-referral, bringing to the attention of the SBC, which inevitably will result in reactive rather than a proactive and potentially predictive posture on the part of the SBC. Can I ask the Minister what the government's intention is in this respect, to look at how, with an effective data architecture framework, we could see useful, vital data from other parts of the state being enabled into this late payment process? So much of this is about small and medium-sized enterprises and the asymmetry they oftentimes find themselves on the end of. And quite right too, it should be focused on SMEs, because as the Minister rightly identified, they are the backbone of the UK economy. They are often described as the backbone of the UK economy from government, but so much more needs to be done to deliver, to support that spine. Easy to say, much more difficult to put in place all the measures required to support them. This bill has the potential to do that, but yet in terms of digital tools put in the hands of SMEs to enable them to engage with this new process, nothing set out in the bill. So in terms of being able to track progress, to understand what their rights are, to be able to calculate what is owed to them, and to be able to understand a pathway into the enforcement and investigation process, we find that those SMEs, often those who are furthest away from digital inclusion and enablement empowerment, will find themselves similarly in that position without greater action from government to support and enable and empower them. When it comes to equality, nothing in the bill. Late payments aren't a neutral concept. They fall disproportionately on SMEs, disproportionately often on minority owners, older owners, disabled person owners, community-based businesses. What's the Minister's view on what we would wish to see on the face of the bill in terms of looking at an analysis currently of where late payments fall and how they impact from an equalities perspective. Similarly, when it comes to ESG, nothing really in the bill, and yet supply chain is vital to this. And when we look how late payments fall in this respect, they fall all too often towards what's described as the lower or the bottom end of the supply chain. Can I ask the Minister what provisions the bill currently has in terms of supporting the government's ambition for supply chain transparency and supply chain positivity? Because currently, the way late payments impact, there is no sense of how this is measured from that critical ESG perspective. My Lords, there are some excellent provisions in this bill. With amendments, they can be excellent plus. I believe we need to empower, we need to enable particularly small and medium-sized enterprises, to enable them to do what they do best: run, grow brilliant businesses and provide great goods and services right across the United Kingdom. I believe through amendments we can make this bill better economically, better environmentally, better for everybody. With amendment, we can make this bill well worthy of prompt payment.
My Lords, we have an economy heavily dominated by giant, usually multinational companies. There's nothing inevitable about that. It's a result of political and policy decisions made over decades by multiple governments. It could be, can be, must be different. Now, the Green Party sees this bill as a modest step in the right direction of levelling the playing field between very large, powerful companies and those who are often their suppliers, who are in a supplicatory position, inevitably facing towards them. Now, like many other people in this debate, I bring family stories to this. I'm a builder's daughter. My father was a manager for a subcontractor in Australia, so I learnt early on, as soon as I was old enough to understand why my father was angry or stressed, that one reason often was concern about his firm going broke, because it was not getting paid or the payment was being delayed, and sometimes that payment would arrive eventually, sometimes it would never arrive. And that was something that does damage to great many small and medium enterprises. And I think we can take the case study, which is very illustrative, of Carillion, which went down in 2008 and took with it many, many SMEs. And I think this shows the link between the two problems of late payment and financial collapse. I draw on the excellent, as always, library briefing to quote the economist Orkan Kaya, who notes that unlike 30-day terms, which some offer, Carillion imposed payment of up to 120 days on many smaller suppliers and contractors. So that meant there was 3 months' work done, debts incurred for, that then they were not paid. Now, I think one of the questions I'd like to directly put to the Labour Lord the Minister, I think we can very clearly see that very often when a company starts to delay payments and stretch out its terms, that's often a sign of financial stress within the company. It should be regarded as a red flag. Now, I can't see anything in the bill, and I wonder if there's any way that we might be able to use this bill to see a red flag system. Obviously, there's word of mouth in various industries. People start to talk to each other and explain the problem, but word of mouth is not a very legal or formal framework. And I think this also needs to be used this case study needs to be used to raise a broader point, that we have huge problems in the structure of many sectors of the UK economy, problems that this bill on its own only tackles at small scale. There's the disaster of outsourcing of public services to the lowest possible bid, and the disaster of business approaches and business culture, and which I have to cross-reference today's bill with yesterday's second reading of the Financial Services Bill. I note that the parliamentary inquiry into the collapse of Perillion said it was a story of recklessness, hubris and greed. Its business model was a relentless dash for cash, and 3 directors were later fined for financial misreporting by the FCA. These issues are all interrelated, and they're all related to the nature of our business culture, which really holds back so many SMEs in our society. And I feel like we often refer back to the construction sector, and that's one of the questions I'll come back to the Noble Lord the Minister on. But with thinking about the great state of disarray in the construction sector, one awful symptom, I just feel I have to raise this as we debate this. The COIB, formerly the Institute of Builders, their latest report on mental health in the sector shows that male construction workers are 3 times more likely to die by suicide compared to those in other industries. And 28% of respondents had experienced suicidal thoughts at least once over the past year. We have to acknowledge that we have a real problem in the structure of the industry. Late payments are part of this story, but they're only a small part. There's also the issues of subcontracting and fake subcontracting, where essentially individual workers are forced to become their own small business. And they, of course, can encounter all the problems that this bill attempts to cover. But if we think about the situation of someone who is literally one quite low-paid worker forced to firm their own business, how they're going to be able to hold late payments against a giant construction firm, that really helps us to frame the shape of this bill. On that point, and I draw here on a very useful and detailed briefing from the ECA and Actuate UK, seeking clarity on the Small Business Commissioner's role in terms of construction. And so perhaps the Noble Lord, the Minister, could address that in the wrapping up, or if the Noble Lord prefers, could write to me about that. I also, to raise another quite technical point, which I'm again drawing on that briefing, is the question of section 113A, talking about retention, which of course what this bill is seeking to prevent happening, retention clauses. And it talks about related agreements. But the question is, perhaps there's the thought that the judiciary is going to interpret attempts to recreate retention clauses by calling them something else, going to interpret the ban very widely in terminology. But I think it's important to address how we're going to make sure that we don't just get retention bans called something else, but they're still effectively retention bans. I also think this briefing raises some really important issues about the transition period and last day retention. There is potentially a cliff edge at the end of year 3 where all transition retained sums could become due simultaneously, and that could create a real state of chaos. Again, that might be something the Noble Lord the Minister would want to write about, but I think this briefing raises some very serious issues. And also, in terms of the detail of the bill, the penalty for unlawful retention. That is potentially very useful as a penalty, but it will only become a reality if SMEs can afford to enforce it. I don't see in the bill any resourcing provided to help SMEs with enforcement. So what's going to happen with that? Now, we've had quite a number of Noble Lords, and we've had discussion of 60 days, 45 days, 30 days. I think it is just really important to note and demonstrate what might be possible, that the contract in the UK defence sector, the Ministry of Defence direct contracts, specify that 90% of undisputed SME invoices must be paid within 5 working days. I think it's interesting to note that when we think about what is actually possible. Also, I think it's really useful to think about comparative terms here. And again, my question, this presumably does not cover the supermarket, the food and farming sector. We have the grocery code adjudicator there. But how does this bill interact with the groceries code adjudicator? What's the interaction there? And finally, this is an issue already been raised by the Noble Lord, Lord Lansley. Again, and like the Noble Lord, I draw on the briefing from the National Housing Federation. and they do really deliver a cry from the heart of concern about the Section 106 provision. And we're talking a lot about inequality of arms, inequality of power between suppliers and purchasers. But here we have to note that a major construction company versus a housing association in some ways turns that balance of power around. If there's a problem with let's say a block of flats that's been constructed for social housing, purchased for social housing, housing associations may well not have the capacity to carry out repairs themselves. They may also find it extraordinarily difficult to bring legal action against a major developer. So I think this is an issue that the Noble Lord is really going to have to address as we progress through this bill, if not today, because the National Housing Federation, I think, has identified an issue. I don't know what the solution is, but I think we do certainly need to address it.
My Lords, I welcome the opportunity to speak in support of the Commercial Payment Bill, and it's been extremely interesting to hear the various points made by my noble lords, and particularly by Baroness Alexander of Clevedon and Lord Holmes of Richmond. And I would like to thank my noble friend the Minister for his very detailed and passionate introduction to this second reading. This bill deals with an issue that causes real frustration and damage to many small and medium-sized businesses across the country. Quite simply, too many businesses are not being paid on time for the work they have already completed. For large companies, delayed payments may sometimes be seen as an administrative issue or a cash flow decision, but for smaller businesses, late payment can mean sleepless nights, financial stress, and serious uncertainty about their future. Many small firms are spending too much time chasing invoices instead of serving customers, training apprentices, creating jobs, and expanding their businesses. The scale of the problem is significant. Around 44% of invoices from SMEs are paid late, with late payments estimated to cost the UK economy approximately 11 billion each year. Around 14,000 businesses also close annually because of late payments. This should concern us all. Small businesses are central to both our economy and our communities. They employ local people, support our high streets, and often provide opportunities for people starting out in work or setting up businesses of their own. This legislation is a welcome step towards tackling a problem that has existed for far too long. I particularly welcome Clause 18, which strengthens the power of the Small Business Commissioner to help resolve payment disputes between smaller and larger businesses. Many small businesses simply do not have the time, money, or legal support needed to challenge unfair payment practices. Giving the Commissioner stronger powers to investigate poor behaviour, resolve disputes, and take enforcement action is an important step forward. The bill gives Small Businesses Commissioner powers not only to resolve disputes, but to investigate persistent poor payment practice and to take action against repeated offenders. Clear maximum payment terms are particularly welcomed. It cannot be right that small businesses wait for months to be paid while still being expected to pay wages, suppliers, rents and tax bills on time themselves. The bill rightly tackles the issue of late payment interests. If a business pays late, there should be consequences. Removing loopholes that allows companies to avoid statutory interest is therefore welcome. These problems are especially serious in the construction sectors. We've heard from many lords. Many construction subcontractors and specialist firms are small business operating on very tight margins. They may already have paid for labour or materials long before receiving payments themselves. I have read the helpful briefing from Actuate UK, the Engineering Service Alliance, representing over 60,000 firms, together with the Electrical Contractors Association, which represents businesses working across the electrical and engineering sectors. Their briefing highlights how retention can remove vital cash from small businesses for months, sometimes years. The briefing warns these practices can leave smaller firms exposed if larger contractors collapse. Clause 11 to 17 represents an important step forward to improving fairness in construction contracts. Apologies. The collapse of Carillion shows how serious consequences that unfair payment practices can have across a supply chain. I support the government's intention to improve fairness in this area, including through the proposed ban on retention. As the bill progresses, I hope that the government will continue to listen carefully to concerns around enforcement and implementation. One point I would like to raise is that these protections will only work if smaller firms can realistically use them. Many SMEs simply cannot afford lengthy legal disputes or complex adjudication processes. Without practical enforcement, some smaller firms may still feel unable to challenge poor payment practices. Can my noble friend the Minister say more about how the government intends to ensure that these new protections are genuinely accessible in practice? There is a wider issue about business culture. Paying suppliers on time should not be seen as an optional good practice. It should be part of being a reasonable business. When smaller firms are paid fairly and promptly, they are better able to invest, hire staff, support apprentices, and contribute to local economic growth. That matters not only for individual businesses, but also for the reliance of local economies and supply chains more broadly. As the bill moves through this House, I hope there will be very careful consideration of how to prevent companies simply finding new ways around these rules and loopholes through different contractual arrangements or payment structures. This bill sends a clear message that small businesses should not be expected to carry unfair financial risks while waiting to be paid for work they have already completed. Fair and timely payments are not just about good business practice, they're about confidence and building a stronger and more resilient economy. My Lords, I support this bill.
Hear. My Lords, during my entire life as a parliamentarian, the health and enduring viability of the small business sector has been at times a matter of concern, with governments of all stripes to an extent failing or falling short of being able to deal effectively with the one key necessity for the success of these businesses, which is cash flow. I declare an interest in this as being for many years a Deputy Chairman of the Small Business Bureau. But I warmly welcome the opportunity that this bill offers and the manner that the noble Lord the Minister explained it. It shines a light on the key element of this, which is indeed late payments. And in many parts of the country, we see evidence of the consequences of this. A visible deterioration in the range of commercial activity in our high streets. We've seen the growth of charity shops, their causes, however admirable, now even going into reverse, despite lower business rates for them because of more recent national insurance hikes and high electricity prices. What is true is that the British Business Bank and the Office of the Small Business Commissioner provide reassurance and support, yet far too many businesses close every day with all the consequences for employment. Hence the welcome increase in authority and empowerment of the Small Business Commissioner, and for naming and shaming, and for the enforcement of fines. At the heart of this for business is to have confidence. And I know, as one who started a business, yes, confidence is fundamentally important for startups, And of course, further risk assessments always arise when expansion is contemplated and the velocity of payments becomes even more crucial. Is the Minister satisfied that those with small businesses are able or will be able to go online and check out the payment policies of larger supplier organizations? Information is the key, and is the Minister content that it is clear where possible for the average time to pay to be clearly indicated? Yeah. Nothing would be more valuable than the ease of being able to start a new search by simply entering the business name of a supplier. It is one thing to have a payment performance report, but how it can best be used and importantly ensure the monitoring of evidence. It would be good for smaller businesses to feel comfortable about accessing a league table indicating the time to pay, and this would incentivize suppliers to be the best. Supermarkets already supply this information. If the best suppliers are clearly known, they will attract business and fulfill this role, and this would enhance the integrity of the supply chain. Then it comes to enforcement. Is the Minister satisfied that the Office of Small Business with enhanced powers has the actual capacity to be effective in representing SMEs' interests? For example, how many individuals will be attached to this role in the future? So vital given their expanded duties. Now, there are a number of local authorities which admirably pay rapidly. So I would like to turn to the 60-day ruling. If there is a possibility, and I hope not, that this will cause a drift upwards, actually elongating payment times rather than the reverse. And this would indeed be regrettable. I would welcome clarification about public authorities paying in 30 days, but then why can't private companies do the same? A question I've been asked to put forward this afternoon. We want to attract more foreign businesses to boost our GDP. My Lords, highlighting the importance of getting not only the right legislation, but a clear message that this country is open for business. For 10 years, like others, I was one of the Prime Minister's trade envoys, and access to information about business opportunities in this country has hugely increased over the years in this time period, and I pay tribute to our embassies abroad in this pursuit. Nevertheless, our export and import relationships are not at the sophisticated and all-embracing level that we find so frequently in other countries, where export activity is promoted by SMEs, by these countries, and encouraging their activity abroad, supporting and creating an environment for our small businesses to thrive. They are, after all, the seed corn of the economy. And this would be very welcome to all of us in your Lordship's house, but there is certainly more work to be done.
I welcome this bill, and I also welcome that there is great, across the House, support for the bill, and that we can get this bill through and help everybody else make Britain a much better place and a much more welcoming place. My Lords, I'm pleased to speak in the support of the Commercial Payments Bill. The bill addresses the practical problem, which has very serious consequences for small businesses. Timely and reliable cash flow predicts many serious matters, whether wages can be paid, whether rent can be met, whether an investment into a company can be made, and at the end of the day, whether a valuable company, my Lords, can survive. The economy of the United Kingdom is built on a small and medium-sized enterprises. At the start of 2025, SMEs made up 99.9% of the 5.7 million private sector's businesses and accounted for 60% of employment and 51% of turnover, my Lords. Therefore, a conversation focusing on supporting SMEs is really a conversation focused on improving the quality of our economy as a whole. My Lords, additionally, we know that when we talk about SMEs, we're also talking about the jobs, families and local high streets attracted to every single enterprise. This bill goes to the heart of our economy by improving business conditions for these vital companies. Approximately 44% of invoices from SMEs are paid late, and those very late payments are estimated to cost the UK economy almost £11 billion each year, forcing 14,000 businesses, my lords, to close annually because of late payment. My lords, every single closure represents a person who has taken a risk and who has often employed others and created work for their community. I particularly welcome the government's recognition of the payment culture matters. A small business should not have to act as an unofficial bank for the larger customer, nor should the entrepreneurs spend precious time chasing money that already is owed to them, when, my lords, that time could be spent growing their businesses, training staff, improving services and winning new contracts. My lords, I know that much has already been said in this House about construction, and I welcome the bill's attention on that issue. But I wish also to focus on small businesses and women's role in the SME sector. It is women who are building businesses and employing women and men, but employing women working as sole traders, employing local people and supporting their families for them. Reliable payments is central to confidence and independence and growth. Women-led businesses can face particular barriers in accessing finance. I know the government is trying to make this easier, talking to the banks, but still we need more support. Networks and investment when payments is delayed through no fault of their own, and these barriers become harder still. My lords, a late invoice can mean postponed childcare, delayed wages, additional borrowing, or the loss of confidence to take on the next contract. If we want more women to start and scale businesses, then a fair and prompt payment must be part of that ambition. My lords, I welcome the bill's provision to strengthen maximum payment, to make interest on late payments more effective, and to give the Small Business Commissioner stronger powers. I hope that when the bill progresses and it is implemented, that ministers will keep under close review whether the overall timetable for acceptances, verification and payment is sufficiently ambitious for the smallest of firms. It's really important that we have some clause that we can really look at this after a year or so. In practice, a period approaching 90 days can still feel very long for a small supplier managing on a very tight cash flow, my lords. I hope that the strengthened Small Business Commissioner will be as visible, accessible and trusted by the smallest firms, including sole traders and women-led businesses that may not have the legal teams or the finance departments behind them. This is a welcome bill. It is pro-business, pro-growth and pro-fairness. Most importantly, it seeks to change not only the rules but the culture, and I look forward to supporting the government in that endeavour and to ensuring that small businesses, entrepreneurs and women-led enterprises are at the heart to its success.
My Lords, it's a great pleasure to participate in this debate and indeed to follow the noble Baroness Lady Goody, who made some excellent points as always, particularly on the backbone of the economy that's represented by small businesses and of course of the role of women. Very important points to make. My Lords, I declare my interest as chair of a charity, International Students' House, which, like many other institutions, is potentially impacted by late payments and is also affected by the law on retention in construction contracts as we acquire purpose-built residences for our students. My Lords, I thank the Noble Lord the Minister, Lord Lyon, for setting out the background to the legislation so clearly, so typically, and the analysis of the provisions contained in the legislation. I know he has considerable business experience and of the problems caused by late payment. Thank him also for graciously acknowledging the role played by a Conservative government. My Lords, like other noble lords, and indeed the general welcome from many relevant organisations such as the CBI, the Federation of Small Businesses, the Institute of Directors and the Institute of Chartered Accountants, I'm very much in favour of this legislation. Small businesses, my Lords, as has been said, constitutes the backbone of our economy. The fact that some 14,000 businesses per year close because of late payments is a flashing light that has been ignored for too long. I welcome that the unscrupulous, unfair exercise of superior bargaining power by some large businesses is to be outlawed by this legislation. This legislation seeks to combat that unfair and unscrupulous practice of delayed payment by rendering late payments, essentially those over 60 days for private businesses, illegal, and by imposing mandatory interest provisions where there's late payment of 8% above Bank of England base rate. Previous legislation, no doubt well-intentioned, has been ineffective as it has been easy to circumvent. It was pretty much optional, more of a signpost of desirable conduct than a requirement of that good conduct. I do have, however, several questions for the Minister. The first relates to the 60-day period permitted before the legislation bites in the private sector. An extensive consultation was engaged in and many people, many small businesses participated in that. And so I wonder why the 60-day period was alighted on. Like many others, I wonder why a period of 30 or 45 days would not have been more appropriate. Points raised by my noble friend Lord Lansley, the noble Baroness Lady Thornton, the noble Baroness Lady Bennet of Manor Castle, and my noble friend Lord Risby. Why 60 days? It seems to me that is quite a long period. And the point made by the noble Baroness Lady Bennet about the practice in the Ministry of Defence, I think, is illustrative of the fact that we could bring it down considerably. Then I have a question relating to retention practices. I recognise that retention practices can be used unfairly and harshly against small businesses, and often that is the case. The sort of scenario demonstrated by the Carillion collapse and the consequent damage done to so many small businesses is illustrative. However, does not an outright ban on retention after the transition period merely shift the danger? Purchasers will require performance bond or cash escrows or some other security which would require an outlay of cash at the outset rather than a retention, which may be more damaging to small businesses. I'm not necessarily against this provision, but I'm not convinced that it is the total answer. Retention can be useful and used by some businesses quite reasonably. It's abusive retention that we really should be focusing on. So I'd welcome the Minister's thoughts on that. My concern essentially is that there's a danger of shifting the problem for small businesses. I'm unconvinced that every retention is wrong or abusive. On the extended role of the Small Business Commissioner, I welcome this extension and power to fine late payers, though of course the Small Business Commissioner does not cover construction contracts, a point made by the noble lady Baroness Alexander, and I too wonder whether it would not be better if we were to put construction contracts within the competence of the Small Business Commissioner, and I welcome the Minister's thoughts on that point as well. I have finally a point in relation to the devolved nations. Now I appreciate that the law in this area is essential, a reserved matter for the Westminster Parliament, but clearly the bill is, as I say, largely a UK bill. But there are impacts for the devolved administrations, and with, in the case of Wales, certainly a change of administration. I wonder what discussions have been ongoing and what engagement there has been, and some of the provisions do certainly impact on the devolved administrations. Clause 26, for example, very expressly does. So I just wonder what is happening in that regard. But on the whole, as has been clear during this debate, this is a piece of legislation that is remarkably uniting all sections, all corners of the House, and all parties, and I'm sure it will be given a very fair wind, and that any amendments we make will be to tighten it up and make it more effective. So with that, I certainly give it a very warm welcome and look forward to the Minister's response.
Yeah.
I'm very grateful. My Lords, I'm very grateful to take this opportunity to speak in the gap, to warmly welcome this bill. I do want to pay tribute to the noble Lord the Minister for his for not just for his eloquence in introducing this bill, but for his experience and expertise, which certainly bears its imprint on the bill. He was also gracious and correct to acknowledge the steps taken by the previous government, but he should be very proud of the extent and scope of what is introduced to this House. It will undoubtedly be transformative, even if it may not be the end of the journey. And as someone who has drafted a previous private member's bill on this issue, I do want to say that I do think the bill is impressively drafted, and there is a very good impact assessment, and I'm sure with the issues that have been expertly raised during the course of this debate, we will have a very good opportunity to see if we can improve or just clarify some of the elements outstanding in the bill during our discussions. I would just like to add a couple of points which I think I'd be keen for us to see if the Noble Lord, the Minister, would consider. But I do want to, just before that, pay tribute to the fact that the bill is drafted and the impact assessment is also a recognition of this. This isn't just about bad actors. This actually properly acknowledges the sort of realities of the business environment and some of the issues that do concern businesses about the challenges they have in cash flow. And so I think it is very good in that regard that it is done in a proportionate and balanced way. I do continue to be concerned that it's just about large to small businesses where there are indeed problems of supply chains, where large businesses don't feature on the bilateral relationship. But I do hope that we're able to consider how that may be addressed. Whilst I and many others have always considered 30 days to be the right standard, and there can always be some consideration of a phased approach, I do bear the same concerns that others have, that marking 60 days may well act as a form of reverse for the massive progress that's taken place in reducing overall days. And whilst we're looking at timing, I think clarity is essential. The bill does not currently include a clear statutory definition of when payment is legally deemed to have occurred, and the point at which the clock starts must also be equally clear and resistant to manipulation. I hope that it can be made clear that the proposed 60-day verification period should be incorporated within the 60-day maximum, not added on top of it, which would de facto create a 90-day limit. On mandatory interest, I would welcome confirmation from the Minister that the large businesses will be required to apply interest automatically when settling a late invoice, rather than leaving the burden on suppliers to claim it, something which most would be unlikely to do. I do think that it is time to consider the late payments by public bodies and to merge those into the same regime. When the last exercise that was done looking at FOI data, because of course public sector bodies identify the interest payments they should be paying, but none have ever been claimed. But the last comprehensive exercise identified that 3 billion of interest payments should have been paid to small businesses. The NHS Trust and local authorities pay over 80% of their SME suppliers late, over 30 days. So I do think it is time to consider joining up those regimes. I would also consider making sure that we have the right way in which we're looking at predatory payment terms and other sorts of things. But most importantly, I think the way in which the Small Business Commissioner has gone through its journey to end up where it is in this bill is very encouraging. But I would urge the Minister to consider not just its resources, but also its scope to make sure it retains the role across all areas to help to advise the government on further steps ahead. I welcome this bill.
Great. My Lords, I'm stepping in today for Lord Fox, who unfortunately cannot be here. So I'll do my best to channel him, but I do know the House would have had more incisive comments. This is not my field of expertise. But I will take the opportunity to discuss an issue that is one that very much concerns me, and it won't surprise people. I'm going to raise an issue later in this, in my comments on whistleblowing. Late payments has been one of the most persistent and damaging barriers facing small businesses, sole traders, and the self-employed. We all know it's not a new problem. Successive governments have promised action, yet too many small firms still find themselves acting as unwilling lenders to much larger organisations, waiting months for money they've already earned and that they are already owed. And we all know the consequences are not merely administrative, they're economic, they're human. Recent research commissioned by the Small Business Commissioner found that late payments cost the UK economy almost £11 billion every year, affect around 1.5 million businesses, and contribute to the closure of some 14,000 firms annually. I mean, what a waste. And around 38 businesses every single day. Businesses affected spend an average of 86 hours a year chasing overdue invoices rather than growing their companies, investing in new products or serving customers. And as Liberal Democrats, we've long argued that strong action is needed. Our 2024 General Election Manifesto committed us to strengthening prompt payment requirements and ensuring that large organisations could no longer evade responsibility. We therefore welcome the central provisions of this bill. The introduction of statutory maximum payment terms of 30 days for public bodies and 60 days for most private sector transactions is an important step forward, and so too is the decision to prevent parties from contracting out of statutory interests. Large purchasers have been able to use their bargaining power to impose terms on smaller suppliers who have little practical ability to refuse. And we also therefore strongly support the intention to give the Small Business Commissioner real enforcement powers and regard this as a very significant part of the bill. Now, the current Commissioner has done valuable work, but moral persuasion alone has never been enough, and there must be meaningful consequences for persistent offenders. The ability to investigate poor practices, adjudicate disputes, and impose financial penalties represents a significant shift in the balance of power. And it has been encouraging that so many organisations representing small firms, from the Federation of Small Businesses to Enterprise Nation, the Institute of Directors, and the ICAEW, have welcomed the direction of travel in this legislation. And we are also very much pleased to see action taken on retention payments in the construction sector. Specialist contractors and subcontractors have campaigned for years against a system that allows money to be legitimately earned but then withheld indefinitely, and sometimes lost entirely when a contractor becomes insolvent. So ending this practice is both fair and overdue. However, support for the principles of the bill does not remove the need for scrutiny of its detail. And we will examine very carefully the protection of complainants. The success of the new regime will depend heavily on whether small businesses feel able to come forward. Many suppliers rely on a small number of customers for a significant portion of their income. They may fear that making a complaint will damage future commercial relationships. It's a very, very real fear for many small companies. And we therefore want assurances that robust safeguards exist for complainants and that information can be provided to the Commissioner without exposing vulnerable businesses to retaliation. And that brings me to a subject which, as many know, is very much at my heart, to the issue of whistleblowers. A key power for the SBC is the power to investigate where poor practice is suspected. I don't think the SBC can rely solely on the information it gets from complainants. To do that, the SPC needs broader information, and that means it needs a safe channel for whistleblowers. Now, a whistleblower is not the same as a complainant, and it's important not to confuse the two. A whistleblower, for example, who is an employee of a construction company, may be absolutely key in providing the necessary information over persistent poor practice over, say, retention payments. But I checked. The SBC is not a prescribed person. So the employee providing that information does not even have the protection that would be available in many instances under the Public Interest Disclosure Act. That's protections of confidentiality and an ability, if there's retaliation, to go to an employment tribunal. It doesn't exist, and I would like the Minister to address that. But I always find the Public Interest Disclosure Act to be very limited. That's in its scope, as many people know. And a supplier who is not complaining about itself, but has come across key information. And these people are going to be absolutely crucial to the effective work of the SBC. That supplier has no protection at all from retaliation. And since you can easily get informal blacklisting, because a particular large company will have friends all over the place, that's contacts and connections, that there has to be some mechanism for those suppliers who provide information on bad practice in the sector to be protected from retaliation. And I would like to know from the Minister how that gap is going to be remedied. My Lords, we also question whether the government has been sufficiently ambitious on payment timescales, and that issue has been raised basically around the House today. There's significant support for a 45-day maximum period, and we will explore whether or not that should be the eventual goal. The bill rightly introduces limits on when payment disputes may be raised, but there appears to be less clarity about how quickly those disputes must be resolved. There is a risk that an unscrupulous purchaser could simply raise a dispute and then allow the matter to drag on indefinitely, exerting commercial pressure on a smaller supplier to accept a reduced settlement. Are stronger safeguards needed, or does the Minister think that's already embedded in this bill? Much of the bill's effectiveness rests upon the capacity and independence of the Small Business Commissioner. Powers on paper are not the same as powers in practice. We will want to understand how the Commissioner will be resourced, how enforcement priorities will be determined, whether penalties will be sufficient to deter large multinational firms rather than for them to simply treat it as a cost of doing business, and how Parliament will scrutinise the exercise of these new important functions. Finally, we note that significant elements of the framework are left to future regulations. Now, delegated powers may be necessary in some circumstances, but Parliament should be cautious whenever fundamental aspects of a regulatory regime are deferred to secondary legislation. We will therefore examine closely whether the balance between primary legislation and ministerial discretion is the right one. My Lords, this bill addresses a genuine and long-standing injustice in our economy. Small businesses should not be forced to bankroll large ones. They should not have to spend weeks chasing invoices instead of serving customers and creating jobs, and they should not face insolvency because another business has chosen to treat prompt payment as optional. We look forward to working constructively across the House to ensure that the final legislation delivers the robust protections that small businesses, contractors and the self-employed have waited to see for many years. And consequently, I beg to support the bill.
My Lords, I refer to my small business interests as set out in the register, but I welcome the chance to speak to this bill for the first time, and I thank all noble lords who have contributed. But most of all, I thank the noble Lord the Minister for his introduction and for his previous engagement, and genuinely for the expertise he brings to this particular subject. My Lords, I'll begin by reaffirming our support on these benches for the broad provisions of this bill. Industrial strategy must allow smaller businesses to both survive and compete with larger firms, so entrenching good payment practices, tackling asymmetry in the construction industry, and increasing the powers of the Small Business Commissioner are all very sensible aims. My Lords, on the subject of late payment terms, it's fairly clear that a number of interesting questions have been raised, but specifically around the 45 and 60-day limits. A number of good questions, including from my noble friends Lord Lansley and Lord Holmes, and the noble Lord Mendelsohn and the noble Lady Baroness Thornton have addressed this issue. But what I would like to press on perhaps, and I think it might assist the House, is the new payment term must inevitably be balanced against the ability of businesses to arrange their finances and pay. So I wonder, in order to assist the House, if the Minister could outline the trade-offs between a 45 and 60-day payment limit that have already been considered and the decisions that have been taken as regards the face of this bill. For example, I note that the impact assessment seems to suggest that 350,000 more small businesses might be caught by a change from 60 to 45 days. So could the Minister perhaps confirm that those numbers are roughly correct? And has any impact assessment, or any impact that the Noble Lord the Minister has seen, looked at precisely what the financial impact of that would be for those businesses? As I say, I can see merit in both sides of the argument, but I think it would help the House to understand the logic behind the conclusions that have been made. My Lords, I also understand the logic behind a time frame for resolving disputes. Businesses who delay payments should not be able to raise a dispute within the time frame and then delay payment indefinitely, as the noble Lady Baroness Kramer has just noted. The existence of this possibility undermines the principle behind the new deadline for raising disputes. But that being said, my Lords, I am cautious about the impacts of a deadline on resolving disputes. The value of the payment disputes that will fall under Section 7 will have a very large range. Enacting an arbitrary time frame of, say, 14 days would both disincentivise large disputes being brought forwards and divert resources towards ensuring they got resolved within the deadline. And I feel there is a risk of creating a bottleneck around whichever dispute deadline would be. I do, however, recognise the worry associated with an open-ended resolution timeline. So if the noble Baroness and indeed the noble Lord the Minister believe that this worry can be reconciled with my reservations, I'd be very happy to work with them as this bill progresses. My Lords, I'd also like to take this opportunity to repeat the concern that my noble friend Lord Hunt of Wirral raised about the scrapping of retention payments, which we otherwise support. In their impact assessment, the government stated that they would seek to remedy the removal of this insurance option by, and I quote, working with the industry to find other ways of making sure construction suppliers provide a good service, end quote. My Lords, that is surely the right approach. Purchasers must have the available means to seek redress in case of defects or defaults, a point that was very, I thought, ably argued by the noble Lord Doherty of Mulnavy. This is particularly the case within the public sector, as public money must have adequate protection against underperforming workmanship. Now, I hope that the noble Lord the Minister can today update the House on the steps that are taken with the industry towards that assurance. And as Lord Mandelson have noted, other public bodies, as well as various public and local authorities, and in particular local authorities, can be habitual late payers. Public bodies must set an example when they are the ones that are driving a reform. So can the noble Lord the Minister outline how the government is intending to cut back on late public payments? And can he perhaps also set out a timeline for phasing out public retention payments, perhaps before the 3-year transition period culminates? I think there are a number of questions around this subject that deserve answers. And I also look forward very much to the debates around the points raised by my noble friend Lord Lansley, which I thought had considerable merit. May I also say that I thought the noble Baroness Alexandra of Clevedon raised some very good points about retention payments re-emerging as something else. So I look forward to the Minister's views on what might be done to prevent that state of affairs from developing. My Lords, I would also like to pick up on a point made by my noble friend Lord Lee of Hurley on the definitions of micro, small, medium and large businesses. This particular bill uses the Procurement Act of 2023 alongside giving the Secretary of State powers to make definitions. But my noble friend is right to point out to the Companies Act of 2006 alongside the use of less complex entities by standard setters, and not to mention both the Enterprise Act of 2016 and the Small Business Enterprise and Employment Act of 2015, which all use variations of definitions which essentially describe the same thing. Firstly, I would be grateful to the noble Lord the Minister if he could reassure the House that the regulation-making power in subsection 7 of clause 3 will not be used to further deviate from any of the definitions of businesses that already exist. And perhaps more optimistically, does this bill not present us a chance to standardise the definitions of different-sized businesses? We should use this opportunity to think about how we fundamentally categorise businesses, especially as low headcount, high turnover tech and AI businesses are in the ascendant. My Lords, may I also suggest that using a full-time equivalent employee equivalent rather than the simple nominal headcount alongside a standardised turnover and balance sheet total amounts amount would be a more proportional and accurate way of categorising most businesses, although I recognise there is some tension with the point I just made about the new tech and AI type businesses. It is needlessly bureaucratic that so many definitions exist across so many pieces of legislation, and I know that this has been a long-running issue on all sides of the House, so I hope that the Minister will agree to work with us to resolve these through the later stages. My Lords, I recognise the concerns surrounding the Small Business Commissioner. A perfectly free and competitive market would of course negate the need for a third party to arbitrate disputes. But in the absence of such a market, we do support expanding the remit of the Commissioner's office to deal with these instances. Moving responsibilities away from the courts is the right choice, but as has been stated, this must come with sufficient resources. Similarly, in the absence of such a perfect market, I understand the concerns that suppliers who raise consistent disputes or enter into proceedings with an influential customer may face being blacklisted. So for the Small Business Commissioner to work as intended, it must have the trust of the businesses it works for, and this means ensuring against negative repercussions from raising a dispute. I thank the noble Baroness Lady Kramer for raising these concerns, and my noble friend Lord Lee and others as well, and I hope the Minister will be able to address them. I also look forward to hearing the noble Lord the Minister's thoughts on enforcement and resources, as noted by, among others, my noble friends Lord Hunt and Lord Risby. Does the noble Lord the Minister, for example, have any idea of how many staff actually work for the Small Business Commissioner's office at the moment? What resources they currently have? Will they be increased? And so on and so forth, in anticipation of this new legislation. My Lords, as the noble Lady Baroness Kramer has noted, a more fundamental concern with this section of the bill is the expansive Henry VIII powers it gives to the Secretary of State. Section 2G of Clause 18 permits a wide array of unilateral actions, amongst which the Secretary of State can restrict the disclosure of information and exclude specific disputes. My Lords, I understand that the former could be used to protect smaller businesses, but it could also be used to protect the poor practices of larger firms, so I would welcome some clarity on this. And similarly, I wonder whether the Minister could specify in which circumstances the Secretary of State would consider excluding disputes. This has the potential to be a very wide-ranging and therefore some specificity, I can't say the word, sorry, specificity, I wish I hadn't written that, would be appreciated. And indeed, if the noble Lord the Minister is able to give that clarity today, can he say why the specific measures are not on the face of the bill? My Lords, I thought my noble friend Lord Lee's points about the UN goals and large companies' practices with regards to forcing their suppliers to address these complex rules were also worthy of merit and further discussion, and I look forward to the Minister's views on those. But overall, as I say, my Lords, we do have some concerns, but this bill marks an important step in the right direction for this government's industrial strategy. It is orientated towards helping small businesses survive and thrive, and I look forward to working with noble Lords on both sides of the House in the coming weeks.
My Lords, firstly, let me thank all noble Lords, and especially to Baroness Kramer for stepping in for Lord Fox for their informed, thoughtful and constructive debate we've had today. And also for very kind words that they have also said about my opening speech. The quality of today's debate has really demonstrated not only the breadth of expertise within your Lordship's House, but also the seriousness with which members regard the persistent problem of late and unfair payment practices across our country. My Lords, I will try to respond to as many noble Lords' questions possible within my allocated time. If I'm unable to address every point raised today, especially some of the technical and more detailed questions, I will ask my officials to review Hansard carefully and write to noble Lords accordingly and place copies of those responses in the library of the House. My Lords, firstly, there is broad agreement throughout today's debate on one fundamental principle. Businesses that do the work should be paid on time. And that includes social enterprises as indicated by my noble friend Baroness Thornton. My Lords, the noble Lord Lansley again showed the knowledge he has and he brings to the House. He asked whether there should be additional responsibilities on auditors of large companies to sample payments and report. And I think a couple of other laws have also mentioned, I think it was Baroness Bennett that mentioned whether Lord Risby that mentioned whether there is some form of register that we could check on payment practices on some of these big, large companies. As noble lords know, there currently exists credit rating agencies. Many of them are well known for their credit report on some of these big companies, albeit you might have to pay for the services. I mean, this is something that obviously we'll take back to the department and share with colleagues to see whether there is a possibility. Obviously, we'll address as to how much it will cost to have such a register. But nevertheless, I will bring it to the attention of officials. Whilst the bill does not impose new duties on auditors, I hope I can reassure noble lords that in 2025, the government introduced legislation to require large companies to report on the payment practices in their director's report. And I think noble lords would also appreciate that also there were some changes to the definition of some of these businesses. And the impact assessment have actually found in favour that some companies have been moved from medium-sized to small, which basically reduced their reporting requirements as well. So that's also a good sign. So we've got to be mindful of the point that the noble lordship made about definition of SMEs. I, for one, have had many conversations with noble lord about this, but this is something that we have to bear in mind. But for purposes of this bill, we have to define it as it stands, and I'll refer to it in another part of my winding up. My lords, I can also confirm that we intend to introduce secondary legislation requiring boards of audit committees of underperforming large companies to explain poor payment performance and outline improvement plans. Now, various noble lords have asked about the number of days, whether it's 45 days, 60 days, or even 30 days for that matter. From our consultation, my lord, 60 days strikes as a fair balance between helping smaller businesses get paid in a timely manner, whilst also recognizing that in many sectors, 30 or 45 days may have been a step too far at this stage. And I'll give you an example of the publishing sector, for example. Some of the smaller publishers would need more than 30 days or even 60 days to pay some of the larger publishers, and they have a special arrangement for that. And I think that is provided within the limited exemptions that we have in this bill, whereby the purchaser is a much smaller organization compared to a larger one. So we will continue our work to encourage businesses to pay even faster, and for that matter, there's no reason why businesses can't pay within 60 days or even 30 days or 45 days if they offer a discount, which many businesses do. So that is practices that are currently in place, and as many noble lords have mentioned, is a sort of private commercial negotiation between companies alike. So maximum is 60 days, but there's no reason why businesses can't pay faster if they can pay faster. So we will obviously work very closely with the Small Business Commissioner who operates a fair payment code. My lords, I referred to the noble and learned Lord Thomas, who asked whether the bill could apply to foreign or overseas companies. And I think Lord Risby also did ask a question, particularly where UK firms are owed money by companies based abroad. I can confirm that the bill applies to commercial contracts that fall within the scope of UK law, including where a qualifying business is operating in the UK or where the contract is governed by UK law. Subject to consultation, we intend to introduce an exemption from 60-day maximum payment terms for contracts for imports and export. This is to ensure that UK-based companies trading overseas with non-UK-based companies are not disadvantaged by having to offer a much stricter terms. And noble lords would know the whole process of import and export revolves time where goods arrive in the country and also the various custom clearance and all that. So there will be additional time lag required for some of these payments to be made. So, my lords, the measures in this bill, such as maximum payment terms, statutory interest on late payments, and stronger rights to redress, will therefore apply where the contractual relationship is within scope. My lords, I turn to the noble Lord Lee's questions. Firstly, on how the government intends to define the size of business. I think I mentioned that earlier regarding Lord Sharp's point about the different definition. But for purposes of this bill, the exemptions to maximum payment terms, we intend to define business sizes through secondary legislation, following further targeted consultation. For the purposes of the Small Business Commissioner's new functions, the definition of a small business is included in Section 2(1) of the Enterprise Act 2016. The bill provides a revised definition of larger businesses at paragraph 12 of Schedule 4 of the bill. A small business is a business which has a headcount of less than 50 staff, whose registered office or principal place of business is in the UK and which is not a statutory authority. On businesses not using the adjudication scheme due to a conflict with these suppliers, while some small businesses may be reluctant to take forward action against a larger business, that does not mean that we should not help businesses that are prepared to take them. Currently, the Small Business Commissioner handled over 700 late payment cases last year, recovering over £1.5 million of late payments for small businesses. This is an alternative dispute resolution scheme designed to support businesses resolve their disputes in a fair and impartial way. So this is very much a cost-effective way rather than going through a costly and lengthy legal process. And on the definition of persistent, my Lord, I can assure the noble Lord that a larger business that persistently engages in poor payment practices will be if the larger business engages in poor practices on a sufficient number of occasions for it to represent a pattern of behavior. So it's persistent and regular bad practice. In deciding whether to carry out an investigation, the Commissioner will have to consider the extent and impact of suspected poor payment practices and the resources needed to carry out that investigation and whether it is proportionate to do so. And finally, to the point of draft regulations, my Lord, I would like to assure the noble Lord that there is a statutory duty to consult regarding the regulations which the government intends to commence as soon as possible after royal assent. The government will also need to secure the consent of all devolved governments, as mentioned by the noble Lord Bourne, where relevant. Parliament will have the opportunity to scrutinise the draft legislation and actively approve before it becomes law. My Lords, I turn to my noble friend Lord Mendelssohn's point on some of the various points he mentioned, and I thank you for his engagement with me so far, and I look forward to meeting with him next week to discuss his thoughts on this bill. On the definition of payments, in our engagement with small businesses, on the issue of late payment, this question of cleared funds, where money gets cleared in a bank account, has not been cited as a primary concern. Consequently, we have deliberately avoided prescribing cleared funds in statute, as this would introduce rigidity, risk disputes over banking, processes beyond a payer's control, and would constrain innovation in payment systems and practices. My Lords, I mean, just for comparison, I mean, we have to practice what we preach. And as far as my department, the Department for Business and Trade, we currently pay 95% of all our invoices within 5 days and 99% within 30 days. So I think that's a pretty good record. Now, on the point of also verification, the bill includes restrictions and already makes clear that these must be proportionate and not used to delay payment unnecessarily. Taken together with stronger transparency and enforcement, these measures materially improve suppliers' position while preserving the flexibility needed for the framework to operate effectively across a modern and evolving economy. My Lords, Noble Lord Sharp asked a question about resources by the Small Business Commissioner. I can say to him, the SBC is required to publish an annual report and audited accounts which would include details of staffing and resources as well as activity undertaken. The SBC will continue to provide information on its resources. The government is committed and can confirm that SBC will be provided the additional resources needed to carry out its new functions. My Lords, I now turn to Lord Bourne's question on the length of time, and I think several noble lords have also asked the point about the time needed to pay and when payment is due. We want businesses to be clear when their payment period begins and ends, helping to provide clarity for businesses around when they get paid. The events listed in the new section 2B1 applicable in all contracts related to the supply of goods and services and form part of the existing statutory framework in relation to late payment. Requiring business to use one of the 4 triggers will help to provide clarity and consistency for businesses around when they will get paid. My Lords, in relation to devolution, my officials, and I can confirm my officials, have had extremely positive conversations with officials within the devolved governments and also the newly elected governments in Wales and Scotland. The bill sets out a consent mechanism where powers impact upon devolved powers. This respects the devolved settlements, and I'm confident the devolved governments will be able to recommend and the devolved legislatures grant legislative consent motions to this bill. My Lords, I turn now to my noble friend Baroness Alexander's various points, and in which I thank her for her contributions. With relation to the Commissioner having jurisdiction over construction, the Small Business Commissioner will have the power to provide advice and information and training to all businesses regardless of their sector. This will build on its work within the Fair Payment Code, which includes 212 construction companies awardees. The proposed adjudication powers for the Small Business Commissioner will not apply to construction contracts due to the existing statutory dispute resolution mechanisms under the Housing Grants, Regeneration and Construction Act 1996. However, if a construction business enters into a non-construction contract, the Commissioner's adjudication powers would apply. On the definition of retention, which I think probably all noble lords have mentioned, we believe that the definition is robust and comprehensive, and we are confident that it will capture all behaviours amounting to a retention practice. We have also provided the Secretary of State with the power to amend the definition in Clause 16. The power is intended to be used where there is evidence that the ban is being circumvented creatively, defeating the intention of Parliament. On commitment to monitoring avoidance behaviours, the Government will work with the Construction Leadership Council and construction clients to develop practical approaches to minimising defects, as well as working with the financial services sector to identify ways of developing a surety product that they can bring to market for the construction sector, including for small businesses through the supply chain. And finally, on simplifying the transition arrangements, we recognise that abolishing retentions represent a significant change for the industry and its client. Therefore, a transition period is required for industry to prepare and for the market for alternative surety products to develop. The requirements within the transition period also seek to address poor payment practices for retentions in the lead-up to the ban. The Government will also support industry implementation through guidance and stakeholder engagement, ensuring that the transition is clear and manageable, particularly for smaller businesses. My Lords, let me now come to the Noble Lord Hunt's and other Noble Lords' point about retention and how can it sort of ensure defects are addressed. My Lords, despite the existence of retention for over 100 years, it is clear from our consultations that these are not an effective means of preventing defects or even remediating significant problems. Government is committed to working with industry and with surety providers to improve the quality and eliminate defects. Lord Hunt also asked about funding for the Small Business Commissioner, which I think aligns to Lord Sharp. The Small Business Commissioner is grant-funded by the Department for Business and Trade, and they will be provided the additional resources needed to carry out their additional functions. The Commissioner will also have the power to recover the cost of investigations, enforcement and adjudication. My Lords, the measures in this bill also deals with late payment that are proportionate and will address persistent poor payment behaviour. However, they are not so punitive as to disincentivize doing business with small businesses. A 60-day payment term, for example, is perfectly reasonable and achievable. And I'm sure if all noble lords go back and look at the debtors book and the creditors ledger, I mean, 60 days is, I wouldn't say normal, but can be bearable, I should say. My Lords, I think Lord Holmes and Lord Risby asked about public authorities' payment of 30 days and 60 days. Public authorities currently are already required to pay within 30 days under the Procurement Act 2023. It is right the government leads by example, and I mentioned the example set by the Department for Business and Trade, and maintains that high standard. In the private sector, the bill is addressing a wider range of commercial relationships, and a 60-day maximum strikes a right balance. My Lords, the noble Lord Holmes asked about fining global companies, and I take this opportunity to thank him for his contribution, especially his knowledge on AI and digital products and all that, which I will obviously share with my officials. The bill applies to commercial contracts that have a sufficient connection to UK and for government by UK law. The Commissioner will have powers to address poor payment behaviours of businesses carrying on businesses in the UK. So that will address some of the issues that the noble Lord mentioned. My noble Lords, look, I'm running out of time. I will have to write to the noble Baroness Lady Bennet, because she did ask a couple of technical points, and I will ensure that she gets a letter from the official, and likewise Baroness Kramer on a question of a whistleblower and FCC. My Lords, throughout today's debate, noble lords from across the House have brought valuable expertise and experience. As this bill progresses through the committee and subsequent stages, I look forward to constructive discussions with noble lords across the House to ensure the legislation achieves its objective in a proportionate and effective manner. Late payment destroys cash flow, it destroys confidence, and too often it destroys businesses altogether. This government is determined to change that. My Lords, I once again thank all noble lords for the contributions in today's debate, and I commend this bill to the House. Back to move.
The question is that this bill be now read a second time. As many as are of that opinion will say content. To the contrary, not content. The contents have it. Commitment motion.
My Lords, I beg to move the commitment motion standing in my name on the order paper.
The question is that this motion be agreed to. As many as are of that opinion will say content. To the contrary, not content. The contents have it. I shall pause for a brief moment before the next business to allow the noble lords who are leaving the chamber. Energy-related products and energy information, household tumble dryers regulations 2026. Motion of regret. Baroness Hoey.
My Lords, before I move my regulation, I've just returned from Northern Ireland, and I just wanted to say how shocked people are in Northern Ireland at the terrible atrocity that took place last night. This isn't the time to discuss it, but we do need answers, and there are going to have to be proper inquiry. But I'm sure we want to send all our best wishes to the victim and his family. Now, some regulations, my Lords, in moving, there's some regulations are very technical in nature, and the effects aren't felt widely by the public immediately. but the regulations before us today have a very clear and practical effect and are going to impact the lives of many and particularly families, most households in the country. Because very simply, this regulation bans the sale of new conventional tumble dryers, that's convector and vented tumble dryers, from January 2027, and then from then on only new tumble dryers people in England, Wales and Scotland will be able to buy are heat pump tumble dryers. Now, quite apart from the kind of nanny state restriction of choice because of the government's obsession about net zero, the legislation is problematic. While some people may say that they might